Today, I want to talk about commercial loan training program, a commercial lending business. How can you get into this business? There are a lot of brokers, there are a lot of consultants, real estate brokers, real estate agents, mortgage brokers, particularly loan officers, loan originators. They want to get into this business, and there's no formal training for this business. So most of the commercial loan brokers, or commercial lending brokers or advisors, they have come from a business banking industry. So they have been a business bankers before they get into this business. They have worked with the bank for 5, 10, 20 years. And when they quit, they join as a commercial loan broker or advisor. There's no direct path to this program or to this business. There's no formal training for this business. So we created this program for professionals, people who have some sort of background in finance industry. You don't have to have background in this industry. We can teach you from basic to advanced program. So from literally from ABC to XYZ for commercial lending business. So the purpose of this program is to educate as many as people as possible. So I receive at least 5 to 10 new emails and phone calls from brokers or residential mortgage brokers who have been in this industry for long enough time, but they have no clue what they're talking about. So they send me a file with a bunch of documents because they whatever they receive from the client or other brokers, they just forward it to me, which doesn't make any sense. They have no clue what's in the file. So if I ask them what kind of project it is, and is it a construction project? Is it a ground up construction? Is it a fix and flip? Is it a bridge stabilized property? You know, all those things when I ask them, usually they don't have an and as I ask them, "Oh, this is kind of weird." So if I ask them, I need business financial statements for year to date. Usually, I put YTD and 2 years financials and PFS as sources and uses. All those things I put with construction loan. So usually they don't have answer for it. They go back to the client, ask for the same thing. The clients usually don't know these terms and conditions. So they come back to me. So usually they go back and forth between me and their clients or other brokers. And most of the brokers in the chain, in the daisy chain, the chain of the brokers, if I've been contacted by one broker and there's another broker in the chain, there's another broker in the chain, and then there's a client, usually they drop the ball. They usually can't fund the deal because you don't have proper information about what you need to have in order to close the deal. So usually they end up failing, not closing the deal. And usually clients find out that these brokers that they don't know what they're talking about. The same thing with a lender. If you keep sending bad deals to the lenders, they cut you off. They don't like your way of working because they don't have time to dealing with brokers who don't know what they're doing. They want precisely exactly what they want. They want to fund the deal as quickly as possible. So in order to close deals, I mean, you can make six-figure income, six-figure commission in one deal, literally in one deal, and imagine how many deals you can do in a year. But if you don't know how to process deals, just particularly if you don't know how to pre-qualify the deal, usually you're not gonna make it. You're lucky if you close 1 or 2 deals, but end of the day, if you don't know the pre-qualified guidelines, you don't know what kind of documents you should ask the client up front, you don't know what kind of question you have to ask the client up front, it is gonna be a challenging situation for you because you're gonna be going back and forth with your clients all the time, and end of the day, you can't close the deal. And this is my experience with most brokers. I have connected with probably 150 plus brokers or officers, and that's what they do all the time. They send me deals and ask them questions, and they go back to the client, they come back to me, they go back to the client, back and forth, and usually they disappear and they say the client is not interested. And I know why the client's not interested because the clients find out that this person, this broker cannot hold their deal. So I highly recommend you guys to understand these guidelines first before you even talk to the client. If you know the guidelines, if you know the resources where you can go place your deals, then it's much more easier for you to even approach the clients when you know this thing you can do. Contact the client and say, "This is what I could do." And when they ask you something, right away you tell them, "This is what I cannot do." So you save a lot of time. Time is money. If you waste a lot of time on the deals you cannot do versus that you spend time on the deals you can do, it's it's a win-win situation if you understand, what time you have to spend on time on what kind of deal. So if you understand the guidelines and we connect you with the resources as well. There's no middleman, that there's no middle person in between you and the lenders. So if you and then we teach you how to get clients, how to get referral sources, how to make relationship with the referral partner. You get consistent deals all the time. You don't have to hunt for the deals all the time. If you have consistent people who send you deals all the time, like I do, I have people they send me deals all the time. I have no problem with that. But I get some new people, new deals all the time with very unprofessional manner, I would say. There's no disrespect, but they don't know what they're doing. Everyone wants to make money, but if you understand this business, there's a lot of money in this business. Getting deals is not a problem at all, I can tell you that. When you start this business, getting deals is not a problem. If you do all the right steps, you will have deals every day, new deals every day. The problem occurs when you have the deal, but you don't know where to go with the deal. You don't know what kind of document you have, bunch of documents in the deal, and you don't know which lender to go and who can fund this deal, who cannot fund this deal. What is the credit score required for this particular deal? For example, if you get a construction loan deal and the client is it's a very good example. Actually, it's a real example I can give you. The client purchased a property for $4.2 million dollars in 2021, and they paid cash for it. Now they're building multifamily property. It's in California, and the construction cost is $20 million dollars. Equity is as in $4 million dollars. Um, and so this $20 million construction loan, so the total project is $24 million. Altogether, it's 25, round figure. And so for $25 million total project, including construction and the land cost and they have all the approvals and permits and everything. Now they have to start horizontal construction and then vertical construction. So altogether is 20 and a change million dollars for construction. So the total project is gonna be $25 million. So the existing equity is $4.2 million. So we use that equity, most of the lenders use that equity when they paid money upfront for the land. So and the property value has gone up by almost 1.5 to $2 million. So that right now the value, if they have to buy the property today, it's gonna be $6 million. So we use that equity as a down payment. So you probably don't have to bring any down payment if we can do up to 80% LTV in this case. So in this case, the credit score is not so good of the client. So you were able to do probably like 75% LTC cost of the total project. The total project is 24, $25 million. So we may need 25% of the total cost, which is I can't think of my head. So 25 or 25 is I think $625,000 if I can top of my head. So let's say $625,000. So we can lend money up to 18.75 million dollars altogether. So they already paid $4 million, then they may have to cover $2 million on the top. So in this case, uh, the client has to bring only $2 million equity on the table right now. So 20 million, 25 million of altogether cost, and the client is bringing $4 million already they paid and $2 million today they are bringing. This is one of the examples. And so what kind of document do you need? At this point, it's easy to understand that. What kind of document do you need? What kind of do can you do on this? What kind of document do you need? You need sources and uses. And most loan brokers they don't know what is that. You need pro forma, you need construction code, you need experience of the borrower. Very very important. If you're doing a ground up construction, the most important thing is experience. If you don't have experience, that is going to be a challenging situation for you because most lenders they want you to have experience or they want you to have bring a GC on the title, maybe 1%. They have to have experience building similar kind of properties. If they're building, let's say, 80 units multifamily property, you cannot have a GC or a sponsor with 10 unit experience or 5 units experience. You have to have similar. It can be 50. Once you go above 2025, it's the same thing. But you have to have closer to 80 unit experience. You have to have experience. You have to have a good credit score. Location has to be desirable. It cannot be middle of nowhere where you cannot rent out the property. Or you want to sell the portfolio, you can't sell the property. It has to be a desirable area. This particular one is in Los Angeles, Wind City, so it's a pretty good area. Credit score is not as good. It's at 620-ish. So most lenders want 650 plus, or they want 700 plus, but 650 is is okay to fund the deal. And so experience, location, credit score, and ARV is very important after complete value or after repair value. So in this case, the total project is 25 to $26 million at the total cost. After complete value is $35 million. So in this case, most lenders they want to do either after complete value or they want to see after complete value and they want to see what is the loan cost. So they will do 75% loan to cost, or they will do 65, or some do 60% at loan to value, whichever is less. So in this case, both are good. So whatever, 35%, 35, 25 million versus $35 million, a huge, huge appreciation of the property. So they can easily qualify in both cases. But you need to have all the documentation, the resume of the borrower, the bio, what have they done, the real estate own schedule of real estate own properties. We need to have personal financial statements of the borrower. We need to have business financials if they are doing business of construction. They have done some projects. We need to have their projects, what they have done. Um, Again, if they haven't done any projects, we need to have whatever their GC is. We need to have their projects. So all those things we need upfront will understand if you can do this or not. And again, we can use the existing equity, the existing money they have paid up front for the land as an equity. So this is one of the examples. It is not very complicated once you do it, but we teach you how to do that, what kind of document you need, and we connect you with the direct lenders on the phone call, on Zoom call, and you ask them questions about everything. If you have a deal, we can discuss about that deal as well in this program. So this is gonna be a 30 days program. You can join, you can learn about this program at acom-capital.com, acom-capital.com, and you can, there's a link of commercial finance training program. And you can click the link and fill out your information. There's there's a name, email address, and phone number is on the you can be joined. Um, yeah. So basically, you have to click the link acom-capital.com and click find out commercial finance training program and fill up your information. We send you a master class of almost 1 hour. What we're going to teach. I'll just give you a brief information about what we're going to teach. Starting from equipment financing, home financing, purchase order financing, bridge loans for commercial and residential properties, construction loans for commercial and residential properties, DSCR loans or permanent loans, conventional loans, SBN USDA loans. There's some different kind of loans. People don't hear about these kind of loans. Most of the time, it's called mezzanine financing, preferred equity financing, C-PACE loans, CMBS is one of the DSCR loans as well, and teach you how to market yourself at LinkedIn and other places, how to create your profile so people can notice you, up your profile, LinkedIn outreach, LinkedIn messaging, all those stuff, and how you can create your own brand, how you can create your own referral partners and referral sources, how you can create your brand and people come to you. Like we don't never call anyone to for deals, and people 99.99% of the time people come to us for deals and they want to deals. And again, deals are not the problem. Funding deals may be a problem for most brokers out there because it's really hard if you don't know the guidelines. It's really hard to fund the deal. It's really hard to find the right lending source. So I highly recommend you to join acom-capital.com and click at commercial finance training program and fill up your information. All right. That's it for today. I'm just gonna be 15 minutes here and there, maybe tomorrow, and then about it, register, and then we will send you a master class link. Take care.